So the crash in crude is top of mind for folks in the corner office, according to the survey. For more on what this country's executives are seeing on the horizon, we turn to the president and CEO of Empire Industries, Guy Nelson. Good to have you with us again.
Good to be here.
How would you describe your contribution to Canada's economy from what you guys do?
Well, our business falls into two categories. An export business, which is about 2/3 of our business, and 1/3 is in Western Canada and affected by the drop in oil prices.
So you're sort of straddling both sides of this conversation, because we found that there is a disconnect between what the corner office thinks in Ontario versus what it thinks in Alberta. What do you think?
Well, I think a dichotomy exists for myself as well. As far as the exports go, we're very bullish. We sell our product into foreign markets, mostly in Asia, Middle East, and the U.S., and then we sell in U.S. dollars. So the weaker Canadian dollars helped us a lot on 2/3 of our business. Mm-hmm. The other side of our business, Western Canada, is impacted by lower oil prices. Our hydrovac truck manufacturing was predominantly sold into the oil patch. We're now resetting that and exporting that more into the U.S. With the lower dollar and into the municipal market, but we did not anticipate the oil plunge as quickly as it happened.
So do you rein in expenses in that part of the country?
Absolutely. We're like everybody. We saw demand really trimmed up by our customers. They were concerned about the drop in oil prices and the impact on the service they provide, so they literally reduced orders, and we had to reduce our production as well. So yeah, it meant layoffs for that particular operation.
So then what about of the pendulum swing? I suppose it largely depends on how quickly it swings from one side of the equation to the other. Are you going to be able to ramp back up production in the event the crude oil collapse is short-lived?
In our case, yes, because with our particular truck that we manufacture has uses both in the oil patch, but it also in the pipelining sector, but it also has a significant use in the municipal sector for digging and excavation. And the U.S. market is very strong, and the weaker dollar allows us to be more competitive with that product. But it takes time to set that, so there is a gap, if you will.
I was fascinated to learn that the corner office, broadly speaking, figures that the best value for the Canadian dollar is 90 cents. Does that jibe with your view?
I wouldn't say, it's very difficult to say what the best value of the Canadian dollar is. I mean, the markets will tell you that. And currently, as you know, it sits at 80 cents, and there's a number of forecasts that suggest it could weaken from there. I'm more in that camp where I don't know where the right level is, but I do know the current level is very much reflective of the current situation, and I don't see the current situation changing. So I'm not, as the C-suite survey suggested, in and around the 90 cents was an appropriate level. I don't see that. I see a weaker dollar and weaker oil prices for a longer period of time.
From the December survey to the survey we're looking at now, the 38th, there's been a shift in what the corner office wants out of the federal government when it comes to the upcoming budget. Mm-hmm. What do you want?
Well, I think our tax rates, both corporately and personally, are at a good level. We're competitive. Globally on that front. I think there was a fair bit of a view that infrastructure should be a good place to spend money. Mm-hmm. I'm more, as I indicated before, a huge advocate of investing in science, technology, and innovation. We see the need for that now more than ever, particularly with our dependence on oil prices, which is a commodity-based, beyond our control. And so the strong countries in the world are investing over 3% of GDP in science, STI they call it. Yeah. We spend under 2%. And so our government's doing some things in that area. They can do more.
That's a long tail solution.
Yes.
That's not something you see right away as far as cash thrown at skills enhancement in this country. Are you having trouble finding skilled workers to do the jobs you need filled?
Not really. We tend to build our own. We hire out of the universities. We mentor students along, and we send students back to get PhDs in our field because we need top. So our universities are an excellent place to find the talent that we need particularly in the design side and then in the innovation side, which is what we invest heavily in.
We had this fascinating conversation with one of the economists at RBC about the federal tax breaks, to your point about personal taxes and corporate tax breaks in the upcoming budget. Most recently we're learning that a lot of what the government is giving us on the federal level is being taken back at the provincial level. Considering you are somewhat removed from that, you're not a direct consumer, I'm not walking into one of your stores to buy an excavator, how does that filter down to you when you see those tax breaks get pulled back?
Well, we don't really have the immediate impact on that. I think Alberta has its challenges, and so they're doing what they need to do, and they probably arguably should do more. particularly on the growth of the federal bureaucracy, or the provincial bureaucracy that they've had. They're 22%, I think, higher per capita than BC. Ontario similarly. So I think it is somewhat frustrating for the federal government to see provinces pulling back some of the tax relief that they've tried to put back into the system to increase expenditures and increase business confidence. But so that's a tough question to answer.
Guy, great getting your insight, though. Thank you so much.
Thank you very much.
Guy Nelson, President and CEO of Empire Industries.